There are many, many accomplished, wealthy board individuals that want to get involved with entrepreneurs.
And a lot of those are going into universities and colleges and working with students in student entrepreneurship programs.
The statistics are that companies formed by students are far more successful than the average company. I think it's about 7 times more likely to succeed. So student-led companies don't have a public relations problem at all. In fact, it's the opposite.
There's another question at the back.
Sure. So you have to kind of enjoy hearing no. You can't let it. It's like sales. You get told no more often than you get told yes. But as long as you get to your accomplished goal, then that's great. In terms of valuation or negotiating your financing, a lot of entrepreneurs will stick on this valuation number. I have to say that's not necessarily the most important number to focus on within reason. If you need to get the deal done, you have to look at what your leverage points are. And of course, depending on who you're raising money for, there are terms in financings that beyond valuation can make it much more onerous for you, preferred share structures that often have anti-dilution clauses and other things that I have to say are much scarier than maybe getting 200 or 500,000 less on your valuation. So yeah, and it's a long process.
Are the valuations down or up, Mike, Basil? What are you seeing on valuations? I think that's always a important question that people wrestle with.
In the angel side, I think valuations probably came off about 25% during the downturn, but it was much less than the capital markets came off in my own observation. But we don't have any statistics on that. That's just sort of anecdotal.
Yeah, I don't think the valuations are down a lot. I think fundamentally, people like us don't really, there's a limit to how much of your company we can own. Because after a point, it's not very interesting for the entrepreneurs. So I think that fundamentally sets a lower limit. And even if you could get a very significant chunk of a company in the initial rounds, in the initial financing, to the extent that the company needs to raise money later and other people have to be involved, they're going to fix it because they'll recognize that if the investors own 80% of the company and you have to sell another half of the company to do the next financing and the entrepreneurs have 10% of the company, they're just not going to be interested. So there's a saying in the business that the last money in sets the previous round price. So I think you don't need to worry too much about the valuation because it will always be fixed in the favor of the people running the company. Now, if you're a founder and you don't have a role with the company as it matures, then maybe you're in a little bit of a dodgy situation because nobody cares about you if you're leaving the company. But to the extent that you're there to make the company work, I think your interests are always going to be protected, or at least that's been my experience. I don't know what you guys think or if you have any comment on that.
We only have a few minutes left, so let me change the direction a bit and let's look forward to the future. What's going to happen in the next year? What are the trends? I look around the room and I see a few investors that I recognize quite well, and the typical investor and you know who I'm talking about, or you know who you are, I should say, will say to me, Mike, I've gone into 6 or 7 deals in the last 3 years. And I've been in them, and I've had no exit. The companies are not doing that well, and I'm really worried that I'm going to lose my investment. That's a personal fear that I have in the angel investing game because, the fact is that to be a successful angel investor, you have to be in at least 16 companies to get your 1 out of 10 shooting star. And most people can't do that and don't have either. If you don't have the money, you probably don't have the bandwidth unless you're a full-time angel investor. So how are we going to deal with that? Do you see any trends? Is there a solution to this?
I think we're looking at a couple of very exciting years ahead. It's no secret that in the States, Obama has opened the taps like we've never seen before. Money is almost free. There's so much TARP money out there now, it's actually starting to slosh across the border. I'm actually involved in a situation now where a tech company that I know is for sale, And people out of the States are coming in, and they're making aggressive bids with no equity. It's all debt. It's all the TARP money finding its way into the economy. So we're seeing things heating up pretty dramatically in the small-size M&A market. Companies under $30 million, I think, are in a good market now, but I think it'll probably be hot in 6 to 12 months and continue like that for as long as the Fed keeps the cost of money as low as it is right now.
I was hoping you might say something about pooling or syndications.
Mike's prodding me to talk about another important new trend, which is that angel investors are now putting more capital into companies than we've ever seen before. It used to be, in the olden days, like 2 years ago, that you'd hear that angels could only invest $1 or $2 million in a company, and then they'd sort of tap out. There's a strong new trend that's underway in the States primarily, where angels are starting to syndicate. Angel groups are forming collaborative organizations where they're co-investing together in companies. And it's quite common now to see companies with $5 or $10 million of just angel money. And there's a story on Vader TV about a company that's raised $92 million, all from angel investors, none from traditional venture capital sources. So as the boomers move into their angel investing years, the promise is for much more capital to be available, at least for the next couple of decades.
I can think of at least 10 BC companies that have raised over 10 million in their very early days from just private individuals.
And in fact, one of the things that's great about BC, it's very different here than it is in the rest of the country, having sort of traveled around while I was raising our second fund, is that we have, I think, the most dynamic angel environment, certainly angel environment, as it relates to investing in tech companies in the country. So it's great that you're here because it's better here than anywhere else. And it's one of the reasons that I think the venture capital industry seems to be working as tough as it seems at times. It seems to be working better in British Columbia in terms of the amount of money that's available. Largely as a function of the angel community that we've got here. There's some great government programs that keep angels in the market and increase the amount of capacity that they have. So that's the bright spot, I think, in the market. You're in the best place in the country you could possibly be to get a company going.
And I think BC is still the best place in the world for doing R&D type work, because you basically get back 68 cents on your R&D dollar using both the provincial and the federal SRED credits.
Right. And
I don't know any place in the world that's better than BC to start a tech company.
And we're certainly seeing now U.S. VCs that have invested for their second time in companies that we've been the lead investor on, because they're starting to kind of connect the dots there.
And we've got a lot of private investors coming up from, there's a Microsoft gang from Seattle, there's investors from Bellingham, Portland that are coming up here to invest in BC companies. Right. It's exciting. Are we almost out of time?
We are out of time. Thanks very much. I hope everybody had a chance to glean some excellent information from our distinguished panel. And on behalf of the BC Innovation Council, I would really like to thank our moderator, Mike Volker, and the rest of the panel. Join me in giving them a hand.